Hey friends, it's Dog Master, which means it's time to level up your trading skill. Today we're diving into one of the most powerful tools in technical analysis, Bollinger Bands. If you're looking to understand how they work and want to learn 3 proven strategies to keep you ahead of the curve, you're in the right place. Let's get started. So what exactly are Bollinger Bands? Developed in the 1980s, this technical indicator is still widely used. It helps you determine whether a price trades high or low relative to previous deals. Bollinger Bands consists of 3 lines. The middle band, this is just a simple moving average usually calculated over 20 periods. The upper and lower bands, these lines are placed at a distance of standard deviations from the moving average. The concept is pretty straightforward. The bands expand when volatility increases and contract when it decreases. When the price approaches the upper band, the asset is considered overbought. When it nears the lower band, it's seen as oversold. Trading with Bollinger Bands requires a solid understanding of market dynamics. Let's break down how they work in practice. First, the bands stay narrow when the price moves sideways, indicating low volatility. This could signal that the market is gearing up for a move. A breakout strategy might be your best bet in these situations, but we'll get to that in a minute. Second, if the price suddenly breaks through one of the bands, it often leads to a short-term reversal. But be careful, the market could continue to follow the trend after a brief correction. Like any tool in technical analysis, Bollinger Bands does not give you direct buy or sell signals. Instead, they provide crucial information about market conditions, helping you make more informed decisions. Now let's get some practice. Today I'll show you 3 strategies to make the most out of Bollinger Bands. Strategy number 1. Bollinger Band Breakout. This strategy is based on the idea that if the price breaks through one of the bands, it could signal the start of a strong trend. You wait for the price to cross either the upper or lower band, and then you enter a position in the direction of the breakout. However, be prepared for the possibility of a false signal, which is why backtesting is essential. Strategy number 2. Bollinger Band Bounce. When the price reaches the upper or lower band, it often bounces back towards the middle band. Here you simply take a position opposite to the price movement, aiming for a return to the moving average. Strategy number 3. Bollinger Band Squeeze. This one is a bit more advanced. When the bands tighten up significantly, it indicates low volatility and potential consolidation, but a strong move is likely to follow as soon as volatility picks up again. In this strategy, patience is critical to finding an asset in the right conditions. You wait for the bands to expand and then enter the market when the price breaks through one of them. Let's wrap this up. Bollinger Bands are one of the most versatile tools, much like RSI or Fibonacci levels. By the way, we've got videos on those too, check them out on our channel. Here are a few tips to maximize your use of Bollinger Bands. Try adapting them to different time frames for various trading strategies. Always use them in combination with other indicators for more accurate signals. Keep an eye on the trend. These are rarely clear-cut situations. Always consider the broader market context. Thanks for tuning in, everyone. I hope these strategies help you make solid gains in the crypto market. See you tomorrow.